All right, guys, welcome back for another video. Well, today's video, I want to focus on doing more price action exclusive content. I haven't been doing as much as I'd like, but I do want to pivot towards doing that. And this will be a first part of a series focusing exclusively on price action. The topic of today's video will be the topic of consolidation. How do you analyze a consolidation, and how do you distinguish it from other components, like a liquidity run, things that are happening in real time, right? Because a consolidation is obviously going to be easily identifiable in hindsight, but identifying it in real time and understanding when it's broken is important to considering, the component of time. So we're going to introduce the component of time into this video series. So, right now we're looking at the Bitcoin USD chart, and you can see different levels that are broken. You've got the FTX collapse right here, breakdown, retest up into this level, and then sell off. But again, for the in the context of this video, we want to talk about consolidation. So we're going to pull everything off the chart and just focus exclusively on consolidation periods. And what is a consolidation period? Well, it's a period where volatility has dried up, right? So, what you could look at this period right here. Again, this is a very nuanced topic. So this area, well, we could move this here up here. So price move volatility down here, came to a retracement up here into this price extension right there, and then it came down, set in a higher low, and then came into this midpoint right here. Now this would be considered a lower volatility period, at least relative to what happened previously. Now you ultimately got the break, but the break didn't represent a immediate break of the consolidation structure, right? It came, ran liquidity, and then ran back down here to consolidate further. So what we want to do here is identify, how do you distinguish the difference between a liquidity run and then back into the consolidation range to consolidate further, between an actual break. Now in this, you may look at this as a break above on a closing basis, and then you get your follow through. That's certainly legitimate. Now we also have a consolidation period here as well. Now it's not the longest amount of time, but you can see roughly from July 30th to August 30th. So the better part of a month right here. You get a liquidity run up there, and then a break below. Anytime you get this type of structure, generally this is considered a breaker pattern. So you get a run above, grab liquidity, and then throw it below the consolidation range. That's a classic breaker structure. You're going to get a run back up there. Now, really, the idea is that the longer a consolidation consolidates, from a time frame perspective, the more likely it is for that resolution to be final and binding in a sense. Now, this is a good example where it didn't work out because we had the FTX collapse right here, right? FTX collapsed up here and took the market with it. But, basically what we had here was a long period of consolidation at the lows, really starting from here, 14th of September, all the way to October 20th, so roughly a month at the lows. The dollar started collapsing during this time period. So the dollar starts selling off, Bitcoin breaks the consolidation to the upside, and you have one of the largest exchanges in the space collapse. Well, that's just the inherent reality of the market, right? There, the market does react to those sort of arbitrary events. But, I think a lot of people would agree if that didn't happen, then this consolidation would have based as a consolidation base and ultimately broke to the upside and traded inversely to the collapse of the dollar recently. So right here as well, you got a consolidation period. You come off a low volatility environment right here, or excuse me, a high volatility environment, into a brief consolidation period. And then you see you have another run up above to grab liquidity before running below. That's basically the same structure we saw here, running above and then collapsing below, only more dramatic. So you kind of get the idea, right? I mean, the idea is that, the longer price consolidates, the more likely it is for whenever you see a period of volatility contraction, you're going to get some carry through on it, right? And generally, that's a trend that tends to play out over and over, right? We go back to this summer right here. You had this multi-month consolidation period, and it led to a big squeeze upward. Over here, you had this multi-month distribution period right here, but also accumulation period. Again, remember, things are moving fast in here, but relative to the rate of movement for the prior year was very small. So the idea is that, if um, whenever you're in these consolidation periods like this, um, you know, people, when things kind of slow down, like towards the end of the consolidation right here, again, they're going to take different shapes and sizes, but the broad theme and feature of long-term consolidation, narrowing the end, coming to its inevitable break, is that volatility contraction that you see towards the end of the consolidation, right? So you have a period of volatility expansion leading into the consolidation, and then a period of reduced volatility at the beginning of the consolidation relative to the period of prior expansion, and then throughout the consolidation that volatility dries up. And this is the period where people um, you know what'll happen here, a lot of market participants will end up trading with more risk to make up for the reduction in volatility, right? Which ends up, catching a lot of people off guard because, they're violating their risk parameters to mitigate for, the reduction in volatility. And then when the volatility and, inevitably springs back and like a coiled spring, they violated their risk parameters and they get liquidated. Um, so again, you see, same deal up here. Volatility starts contracting towards the end of the consolidation, then you get an expansion. Um, so I think the idea is that early on in the consolidation, you want to be playing the liquidity runs, right? So you get this volatility expansion right here, and then we get the start of a consolidation with a you know reduced volatility, right, within the context of that consolidation. But you had the peak in the volatility, and you can generally identify that by the peak in volume, right? So you get this volatility expansion, and then the volume peaks, and then that's kind of how at least you have your intermediate term consolidation starting to form, right? The market is changing its state of delivery, and that's when you want to look for liquidity runs, like above the highs right here, below the lows. Generally, different price distinctions and liquidity areas of liquidity are only going to be valid on first pass. Generally, I mean, you can get multiple taps of them within an accumulation range, like a Wyckoff accumulation. But if you look statistically, they're always going to be better at first pass as opposed to second pass. And there is a very clear distinction between trading regions at first pass and second pass. But anyway, you want to be looking for those liquidity runs earlier in the consolidation, and then as volatility dries off, then you're less likely to get, right? As you get this narrowing volatility, you're less likely to get a liquidity run like you did here and here. I mean, you see it to some extent here, right? Price runs up above these highs right here and then sells off a little bit. But it's not a liquidity run in the context that it ran above the highs and came back into the consolidation, right? You basically had a volatility tapering and then an expansion, and you know that was that. Now these areas are very good areas to draw retracements on. Specifically your macro retracements with the longer time price has spent consolidating within that area. Again, it's going to serve as a good base, and a lot of the best trades come in around the point 0.8 retracement. Um, as opposed to the 0.618. You could refer to this as the golden pocket. A lot of people refer to the the 0.8 retracement as the golden pocket. It's the area just below the 0.618. But the idea is that whenever you get these long-term consolidations and then a impulsive move up to create a swing, you have a structure of a price swing right here. So whenever price comes down and hits that level, assuming that the base you're looking at lines up with the 0.8 retracement, 0.79 retracement, that's generally going to be a good trade, right? That's the confluence, you're looking for, right? And in this case, it comes right into the middle of this liquidity base or consolidation base right here. And yeah, it's not a perfect, long-term trade, but you can see it comes down to this level, bases off that level, and then runs up. And you got a few decent trades within here before ultimately the market collapsed again. Anyway, I hope you guys liked this video. The idea here, again, just going back to the basics, is that time spent within a consolidation changes the structure of the consolidation away from liquidity runs towards tapering volatility and ultimately volatility expansion. As volatility tapers, what's happening is liquidity is pulling away from the market and getting farther and farther away with each passage of time. So the carry-on effect from that is that if you have those long consolidation periods, you're more likely to get an expansion that has multiple different legs, right? Because of the time spent within the consolidation, the expansion will likely see multiple price pauses, uh, you know bullish consolidations. If it breaks to the upside, of course, a bullish consolidation followed by another rush higher, potentially another bullish consolidation, another rush higher. And the reason why is because volatility during that period of consolidation has pulled away from the market with the passage of time. Anyway, I hope you guys like this video. If you haven't subscribed to the channel already, please do that and stay tuned for more uploads.